we're going to tell you why so many people on TV are wrong about volatility and what it really means.
Well, as you know, John, and I've been doing it for a long, long time. I mean, when CNBC first brought me in 2007, it was late January, and we started talking about the volatility index, and people just got glossy-eyed. And I'm like, look, it's not that confusing. As far as the volatility index as of today, or the last week or two or three, let's just take a look at that, John. If you go back to April 25th, we were looking at a volatility index measurement of about 17. That path from the upper left to the lower right had begun, and yesterday we got all the way down to 1152. Now we continue to kind of hold somewhere between, call it 1150 and call it maybe 1220, something like that. But it gives you a little bit of an idea of where we are and why we're here. And because of what's going on in the market and all the various catalysts, especially after getting through NVIDIA, which a lot of people were waiting for, and that was going to be a biggie. Let's just remember this. A 16 VIX means you're going to be moving in the S&P about 1% every day. So are we there? No, we're not. Now we're down in the 12s. We're seeing it a lot more of a crunch down. We're also seeing volumes in terms of the spider as well as the options kind of coming down as well. So very interesting times right now, but that volatility index sitting right about near those November 2019 levels, John. We're going back to November of 2019 to find volatility at this low level where we are right now.
Yeah. And folks, when we talk about volatility, that's a measure of risk, really. How much, obviously, if it's a 32 VIX, we'd be looking for perhaps 2% moves. As Pete said, a 16 measurement is a 1%. So 0.5% would be 8. We're not at 8, but we're a lot closer to 8 than we are to 16 right now. At least, right in the middle between there. I'm going to let them know something real quick, Pete, about straddles. Before we get into macro and the futures, yesterday, NVIDIA was trading with a straddle. That's the combination of the call and the put together. That was about $78. You divide that by the strike price, in this case, 950-ish, and you get a move of about 8%. Now, that doesn't mean that the street thinks we're going to move up 8% or down 8%. What it means is 66% of the time, that's one standard deviation, folks. Won't get into that, but 66% of the time, we are going to be within that band, within 8%. So do you want to bet that we'll be above that? That will be, for instance, trading up $100 or more? Well, if you want that bet, you're taking the 33% chance that we could be up there in the 2 standard deviation move area. So that's what it means. Again, it doesn't mean that we're looking at an 8% move. It means 66% of the time we should be somewhere between $0 and $78 in the case of this, up or down for NVIDIA as it was last night. And it was very accurate. NVIDIA came out last night, came out at 950, went to 960, hovered around there. Today it got up 6%. We'll talk about that in a minute. But we just wanted you guys to know what volatility really means without trying to make your eyes gloss over with, delta, gamma, theta, and all that stuff. Anyway,